All right, so I just hit live, so we are now live. So hopefully there'll be some people watching us. I know there's people like Jim who's asking, he was saying hello. Andreas is saying how long will the webinar take? I think we want to just do like 45 minutes or so. Let's see if we can get some really good information from you, Jason. I'm excited because, like, honestly, I've been following Raging Bull and you guys for so many years now, and honestly, this small account journey is probably the most informative, most educational, and potentially most lucrative that I've seen from you guys. The entire like suite of you guys, like Jeff. I love Jeff. Talk to him regularly on here as well. Jeff Williams, also amazing with the Market Navigator and things. But small account journey is something that I'm really passionate about and I'm really excited about. So let's start from the beginning. Let's see. So I can share my screen as well. I'm a member of Raging Bull and Raging Bull Elite, so I can show, like, you know, whatever you want me to show if it helps to like explain.
Sure, anything you want. I'm very descriptive. I think my wife says too much at times. So when Small Account Journey started, the idea was to put $2,000 into trade one, grow that, assuming trade one won, let's say it went to $2,500, and just roll all 2,500 into the next trade, and so on and so forth. I think the very first trial that I did, I came very close to $10,000, and I was just putting max capital into the next trade. Whatever I made on the subsequent trade, all of it went into the next trade. I found that to be a little bit too stressful. I did that a few times, and I found it to be a little bit too acute. And for me, this is just for me. It's not for everybody. But if you're overcapitalized, if you put too much money into a trade, it's very easy to make mistakes. You either stop loss too quickly because you don't want to lose money, or you let the trade go against you too far because you're losing too much money. So you want to try and mitigate that. So I think it's just a good general lesson. And this is something I really picked up from Mark Douglas's book, Trading in the Zone. If you have too much money into any trade, you're either going to undershoot or you're going to overshoot, and either one is bad. So that was probably one of the biggest modifications that we made. Jeff and I sat down and we came up with that allocation structure, which was 5 benchmarks, and that's made a big difference.
And so Jason, like, one of the things I love about you guys is how transparent you are. Do you mind if I share those losing challenges, or is that something?
Yeah, absolutely. Yeah, they're pretty good win streaks, so I'm okay with it. When you're going an allocation, it can be
right. And so that's something I really want to show people, because one of the biggest criticism people get for these challenges, right, is the fact that they'll be like, oh, I turned like, and we're going to do 2K to 10K. And then they'll do it like 3 times and then like, oh, okay, the third time worked or whatever. But then they don't show their losses. And so what I want to make sure is people, because I know what your integrity is. I've known you for a long time now. I've known your trading style. I've known you. I want to make sure that people don't think that this is some sort of like weird, like, oh, he's only showing the one that wins out of 10 or whatever. I want that the value here is your learning curve that I've followed, where you've looked at, like you said, the book from Trading to Win.
Trading in the Zone.
Trading in the Zone. I noticed that you went through that learning curve and you followed him, and you emailed your subscribers and they followed it too. And it went, and people learned from that, which is something that's really unusual. So let me just show you what was the problem, and then we can talk about the solution and where we're at now. Does that make sense?
I love it. Yeah, absolutely. Pull it up.
Cool. All right. Let me just share my screen if I can find it. So, because I think it's a huge problem in the industry, and it's something that you guys are really, really good on. But people, I don't think, fully appreciate. Like,
as you know, my spreadsheet right in the service shows every single trade that I've made in this journey. So I imagine that's what you're going to here.
That's what I'm trying to find. Yeah, it's just bear with me a second, get the software working. So share the journey. Okay. Yeah. So here is journey 1, right? This was the starting point, right? Can you see that on your screen, Jason?
Yeah, I can see it. No problem. Yep.
Okay, I'll just put it full screen so people can see it a little bit better if possible. So that's full screen. So this was what people were, what people will come back to. They'll say, hey, Jason has, now he's making lots of money. He's turning 2,000 into 25,000. But check it out. Like, he lost all of it in one trade. And then the big question is, what are you doing differently now to avoid this? And that's the cool part. And that's what we really want to talk about tonight. So I'm excited about it.
Yeah. I think that trade right there, the Netflix trade, was the Wall Street Journal article. I could be wrong, but Wall Street Journal does these, exclusive, reports. And at the time, they had said that Netflix was cutting their prices in countries outside of the United States, not major markets, anyways. But that was already disclosed in the earnings report. My argument was on that particular trade, and the reason why I wrote it to the ground, because I could have stopped out for a small loss.
Right.
But I was frustrated when the article came out, because at the earnings call, the company said, "Hey, we're gonna eliminate people, sharing accounts." So in other words, my mother-in-law shares my account. She lives in a different house. They're gonna eliminate that, but they're gonna lower the price if you want to keep that person involved, right? So Netflix went about their business, letting people know you can't share accounts anymore, and they started lowering prices in markets where they felt they need to lower them. Well, that exclusive article came out in the Wall Street Journal. It put that trade under pressure, the Netflix trade there. And so this is the problem when you have too much money in a trade. So my thought was, when I started Small Account Journey, I would just take $2,000. I would put it into trade one, which here worked for almost 9 or 10 trades in a row. And whatever was left at the end of that trade would go into the next trade, right?
Yeah.
And my thought is, eventually, I'd land at like $30,000 or $50,000, and hooray, right? I'd be a hero. That's kind of what I thought, and I still think I could pull that off. But the problem here was, and I'm not 100% sure if this Netflix loss was related to that article. I definitely ran into one Netflix situation there. I think this was the one. I was fighting with it, right? Because I knew I was right. Like, Netflix has obviously come around quite nicely since then. But like, when you have too much capital on the line, you either stop loss too quickly, or you get too aggressive with your stop loss, meaning you let it go against you too far. I think so. So the lesson here is, at least as I was going through, the journey, full allocation every single trade, being overcapitalized causes you to stop loss too quick, or to let it run against you. At least in my experience.
Definitely. Yeah, definitely. And it's definitely something I have a problem with as well. Like, and that's one of the beautiful things about starting with a small amount of capital, right? Because you can be a little bit more chilled out. And I know that your rules have changed significantly since this very first attempt.
Yeah.
Very, very quickly, for people joining, this is a bull put strategy. So you're basically selling one option and buying another strike. So you can see on the left here. And this is something I love about Jason, is he's allowing me to show this. Most services won't even allow me to show this kind of thing, right? That you're actually showing your trades here in detail.
Well, most services don't really trade. So
right.
That's the problem with most things you see on the internet. These are all real money trades. So when you're in the trenches and it's happening, it's either good or it's stressful. But to your point, you're selling one strike, you're buying the other strike. It's basically always, for me, a neutral to bullish position on the best companies in the world. So it's a pretty straightforward process, but for some people it's new.
Yeah, and one thing I really like about it is that you're able to often get in at a better price or overall credit than you are yourself. So it's not one of these things where the guru is buying an option and then you're chasing it. It's something that I found that, and I did follow you on this particular. I think I did do a couple of trades on these early challenges, and so I did get better prices than you were able to. I actually was taking wins when you were taking losses, or exiting before you were, sort of thing. So this is an interesting strategy, the bull put strategy. So for you guys listening or watching the replay, definitely check out Jason's bull put strategy. It's a really nice strategy, and Jason executes it really, really, really well. So, but it's not been a straightforward journey. You can see down the bottom here. I hope you guys can see this. There's been several challenges, and my whole point of doing this webinar tonight is to show the evolution. So we looked at challenge 1, which you can see, like, if you'd stopped after a few wins, you'd be up really well, right? You'd be $2,000.
Yeah. The account was up 318%. It's not like I sucked there. It just it grew from. And my whole thought was, my thinking is, and I told people from the get-go, I'm okay if I run a few of these in the ground when I first started to figure it out. This is when we launched this, I think it was back in January. The idea was, hey, I don't know exactly how we're going to frame this, but I'm certain that this is the right strategy to try and take 2K to a larger number, whatever that number means for you or for anybody else. For me now, it's $100,000, but I knew it was the right strategy, but I definitely had to figure out the nuts and bolts. And I still think, all right, but I'm not going to do it again. I still think I could take 2 and do max allocation and run it to 50,
right?
And be able to manage it. But man, you cannot mess up on your stop losses. It is the problem. And so anyways, we talked about that. Yeah. So that was number 2 right there. Yep. Challenge 2.
Yeah. I was just looking at it. Yeah.
Yeah. So that one. Yeah. Another double. So 2 to 4. I'm sorry, 2 to 6. So 200%. Yeah. So, but again, what was that one? Tesla. I can't remember what the news was on Tesla there that kind of went against me. Most of these trades, just personally speaking, well, Netflix for sure. I can't remember on Tesla. There was an opportunity to like stop loss for a small loss, but often I fight with them. Right. That's just a personal battle that I have to live with. But I'm very focused on winning, sometimes to a detriment to myself. I've gotten better more recently, certainly.
Much better. Yeah, for sure. But the cool thing is, Jason, you're humble enough to admit this. Like most people won't admit it, but I've been listening to you in your chats and things, and you're very humble in the fact that you're like, this is what I need to do more, and this is what I'm going to do. And look, wow, suddenly I've gone from 2K to 25K.
Well, I mean, let's be honest. It's not like I was sucking during the first couple. I think it was amazing. I think it was like 15 and 2. You know what I mean? 15 wins and 2 losses. But it's when I think the teachable moment for anybody watching, it's when you get into that loss, it's how you manage that loss that really determines if you're going to push forward or if you're going to go way far backwards. And this is why so many traders boom and bust, me included, like on trading outside of this little journey. I'll be up a few $100,000, then I'll be down a few $100,000, and then back up a few hundred, and then back down a few hundred. It's just this roller coaster, right? And what this journey has really demonstrated to readers is where my personal weaknesses are as a trader, right? And where my strengths are too, right? So so I think it's really forced me to address them. And I think that's the only reason why the most recent journey is going so well.
Definitely. Well, the 2 most recent journeys, and we're going to show them very soon. So if you're thinking this is all just like doom and gloom, guys, like it's not. We're actually doing the opposite of what most people would do. Is like, the whole marketing thing and in this niche should be to show only the most positive results. I'm showing the most negative results right now, right off the bat, so you guys can see them. But even the most negative, look at this. If you'd done the first 4 or 5 trades, you'd have doubled or tripled your account very, very quickly. And actually, he was telling people, I was like, hey guys, if I'm going to start trading Jason Bond's small account challenges, or well, not challenges, journeys, what I'd probably do is I'd probably take like 3 or 4 of them, then pay myself first, and then maybe reset and then continue just to protect myself.
I thought about that too, especially journey 1 where I ran it up to like $9,000. I was like, maybe I should just take 2,000 out here and just play with the 6 or 7. But in my mind, just personally speaking, I knew if I ran that 2 in the ground, I would just reset and go again. I didn't want to do that 20 times though, and lose $40,000 before I made $100,000. Like that would still be, that would be inspirational, but that was my thought at the time.
Yeah, definitely. So is there any questions if you have any questions about what bull puts are or anything like that in the chat, just like type in the chat, let us know. We're just kind of chatting. We don't really have any agenda for tonight. We just kind of want to go through some of the best results, some of the worst results, kind of what Jason's learned over the last what, a few months. I mean, this
Yeah.
challenge here was since April, right? It's April
Yeah,
24th.
April 24th. So I think we're just under 90 days now, and it's gone from 2K to 26,000, just shy of 26,000. So that one's
Yeah,
going really well. But that Lululemon loss there, that's a perfect example. I ran that one straight to, I actually got assigned on that one because I ran it to the ground. Um, Lululemon had crushed their earnings that day, and I broke my rules. I jumped in on
right.
day one thinking that it would stay strong, and it dipped into, if anybody's familiar with a cup with handle, I thought it was going to stay in a pennant. And so Russell, I had plenty of chances to leave that Lululemon trade with a few $100 loss. And
Right.
I was so persistent. 6 months ago when Lululemon reported earnings, they smashed it. Stock went up a ton, and it hung up there. It did not retrace at all. It traded sideways. So this time when it did it, in my mind, I was like, it's going to 400. No way it's going to retrace. And it retraced more than I thought, put me under pressure. I almost still won the trade, but the day before that happened, I got assigned because I was so far away from
Oh,
the
geez.
gold strike. So it's the only time I've ever, in all of these journeys, the only time I've been assigned, which is not a big concern. You just exercise the other half. But, you are vulnerable to get assigned if you break your stop loss rules. If you're too far away from the price, the person, the person on the other side of the trade might exercise. So.
Right, absolutely. And it's the crazy thing is here, this is a 233% loss, but it
Yeah.
didn't set you back that much. It went from 12 to 8. Who cares?
Yeah.
You started with $2,000.
I was still frustrated, though. It should have been, first of all, the trade should have never happened. The rules are never get on in day one. The next loss, there's only 2 losses in this journey here.
Yeah.
60 trades, 58 wins. The next loss was, $220. Had I held that NVIDIA trade to expiration, it would have been a 100% win. But at the time, I was concerned it might end up like Lululemon. So
Right.
I chose the more conservative, which is the appropriate way to trade. I
Yeah.
chose, live to fight another day, if you will.
Definitely. And I mean, 2 losses out, what is it, 60 trades in this spreadsheet?
Trades, yeah.
That's crazy. I mean, taking a minus 14% loss, who cares? I mean, that's nothing. I mean,
you're going to have some losses. Yeah, you just don't want the Lululemon type losses.
No.
Unless you get really unlucky, you're in a trade and you wake up the next day and something horrible happens. But that's not been the case on any of my trades. I mean, the Netflix trade was the hardest one with the Wall Street Journal exclusive article that said, they're slashing their subscription prices and the stock tanked. And then I was like fighting with the stock. That was journey 1. But even then I had plenty of time to leave with a small loss, so
Yeah.
I think it's more of like, as a trader, you need to get over the fact of that you're going to strike out sometimes and just suck it up and move on. But in baseball, when you strike out, the umpire sends you to the bench, and you can't stand there at the plate and swing again. As a trader, when you strike out, you can just keep swinging on the same at bat and really screw things up for yourself. So, the NVIDIA trade after the Lululemon trade, I'm actually quite proud about, even though it went on to be 100% winner, which I think would have been about $2,000 in profit. That is not the point, because at the time, I was very concerned that it could be a $3,000 loss.
Right, like hindsight 2020, and that's what seems to be what's moved you on from these trades where you're really starting to become consistently profitable, because you have 2 of these small account journeys going at the moment. This one, which is the one that's been going since April, which is fantastic. I mean, you guys watching, you want to turn 2,000 into 25,000. Imagine even if you'd done 20,000 as starting capital. Imagine what that would be. Obviously, it's harder the more capital you're risking. It's your own emotional thing that really sets this, but it's pretty cool. So you have Journey A, which is live, and then you also have Journey B, which is live, which I think you just started last month, right? Which is
it was just over 30 days ago. That one's perfect so far, 9 for 9. And 205% return, so $2,000 to $6,091.
Yep, looks like it.
Yeah. So between the 2, what is that? 67 67, yeah, 58, 9, 60, yeah, 67 out of 69. So it's not bad. And actually, if you add them all up, there's only 5 total losses. So it's almost like 80 and 5. But what's important to me is that one of these journeys lands at $100,000. That's like my personal goal. That's where I don't feel like I'll have won or done a good job unless I get one of the 2K accounts. And to be honest, many of them, I don't want, I don't think at this point in time I should land at 0 again unless it's in the first few trades, because that's where I get max allocation.
Right. And do you mind if I share that, or is that something that's
no, go ahead. Yeah, but you can pull it up. That's been the biggest game changer for me. The allocation structure.
Yeah, because I did want to share that, but I don't want to give away your proprietary stuff.
Give away anything you want. Yeah.
Give away.
Yeah, I'm okay.
So,
I'm all right with it.
I'll see. I think I have it in here. You probably know your dashboard better than I do. Is it in the?
Yeah, it's right in. I would just go to the watch list.
The watch list.
The watch list, and it would be halfway down, probably.
Yeah. All right. I'm always very wary that people might not want stuff, but you're so open about things and so here we go. So here's the benchmarks right here. Yeah, but this is what, for you guys that were maybe looking at the small account journey months ago, 6 months ago, or whenever it started, seems to be a big part of what's changed with Jason's mindset and the way he works things. So yeah, it'd be awesome if you could talk us through a little bit of this.
Yeah, I mean, all right. So when we first started, the goal was 100% allocation on every trade. So no matter how big the account was or small, it all went into the next trade. The good news on that is, the compounding effect is really fast. The bad news is, as the account got bigger, your mindset kind of changes a little. Like you start to treat each trade a little bit differently because you're overcapitalized. Even I might put $50,000 on a trade outside of small account journey using the same strategy, but knowing full well that I want to get the 2K account to X number of dollars, in your head you're overcapitalized. You treat that trade differently. So if it goes against you, you kind of feel this pressure. After doing that for a while, really good win rate, but if you mess up a trade, you start back at 0, recapitalize with 2K. We came up with these benchmarks here, and the thought process here is, I feel like I can't guarantee this, and I can't guarantee I'll make it to 100 grand, and even if I do, I can't guarantee that anybody watching will. But Russell, the idea is from 2 to 5K, I'm totally fine doing 100% allocation, because in that time period, that amount of money to me puts no pressure on my shoulders. So I can just trade and feel normal, even though I'm 100% in. I feel no pressure. It's when the account gets closer to 10K, or just that thought of having to get it to 10K, I feel overpressured. So here I do 100% from 2 to 5K, which means I take the full 2,000, put it into trade 1, and as quickly as I can get it to $5,000, then I drop it to 50% allocation. In my mind, I really have to screw up bad for that account to go back to 0. So as long as I can get it from 2K to 5K, I feel like I can get it to 100K. That's just me. This is not for anybody. I'm 11 years into trading. I'm very experienced at this. I've been, doing spreads a long time. So this is how I personally feel. I can't say that everybody would feel the same. But just knowing 100% allocation put too much pressure on me. Well, it didn't really in 2 to 5. As you saw with Journey 1, it went 2 to 9 before I made a mistake. So 2 to 5, then I dropped to 50%. Once I take 5 to 10, I drop to 25%. In my mind, that's where it's going to get to 100. It's just a matter of time, because now I'm down to 25% allocation. And if you think about that, that's great. First of all, 2,000 to 10,000 is a big achievement. But at that point, I'm still putting more in per trade than I was at the very beginning when I was doing 100% allocation. I'm putting 2,500 in per trade, all the way up to 20,000. So more recently, when I crossed 20,000, I was putting $5,000 in a trade, because I could do 4 $2,500 trades when it was at 10K. But once it grew to 19,000, I was doing 4 $5,000 trades. And so if you think about that for a second, the compounding effect on a 30 to 50% winner really pushes that account forward fast. So when it got to $20,000, I dropped it down to 15%, and that's where I am right now, benchmark 4. So at $20,000, 15% is about $3,500 per trade. So I'm still putting way more in than when I started at $2,000. Which means a 30 to 50% winner on 3,500 at a $20,000 balance divided by 7 is going to give me it's maybe not 3,500 but about $3,000. It's going to give me that quicker growth, and then of course once it crosses $25,000, you're still at that 15% allocation. So you're at like almost $4,000 per trade. And then, so as the account grows, the allocation percentage stays the same. So the balance that you can put on each trade grows. The percentage you're trying to take out is always 30 to 50. And so, I mean, you can see the journal, you see how it kind of compounds. I'm telling you, it's the best thing that I've done just personally, because I know in my heart, as soon as I get to 5K, I'm pretty insulated. That in my mind, it just gives me this high level of confidence that, this is going to land at 100. Just don't take any big losses and just keep with the system.
Yeah, and I'm excited to see you get to 100. I honestly, I have to admit, if I'm super, super honest here, I was surprised after the first couple that you made it to 25. So I'm rooting for you for 50, 100K. I'm like, okay, you can do it, man. You can do it. We have a bunch of questions. So, should we do some questions and see? I think you've done a great job explaining a lot of things, and there's a bunch of questions. So what I can do is I'll read them out, but I can also put them up on the screen as well. Some of them won't take very long. So I'll start at the very top here, which is, so all of these are credit spreads. Just put that up on the screen. And they're all credit spreads.
And there was one bear call, but still a credit spread. But let's not even include that in the conversation. Generally speaking, I am simply doing short put verticals, guys and gals. You can call it a bull put. You sell in a vertical put spread, or also called a short put vertical.
Yep. Okay, another one. I'm just going to keep hitting you for the next 10 minutes. Yeah. Does Jason give members a stop loss, or is that up to members to manage their trades after they are in? So that's a good question. What's the I alert before I get in, before I get out on the phone. So that's one answer. But prior to getting out of a trade, whether it's with a loss or a profit, and again, I alert people before I jump in, jump out of a trade. The sold strike is the conservative stop loss. We always want to be 1 to 2 strikes away from the current price. So the current price, $300, let's say on stock XYZ. We might want to sell the 290, buy the 280. 290 becomes our conservative stop loss area. 280 becomes our more aggressive stop loss area. We're trying not to we don't want to be anywhere near expiration on these trades, which means even if you are at the bought strike on a more aggressive stop loss, you're still not losing the full amount that you can lose on the trade. The only way you lose the full amount is if you're below the bought strike at expiration. Yeah, and honestly, from what I've seen from Jason over the last 5 years I've followed him, the education part is huge. The idea that you take responsibility for your own trades, but also showing you what he's doing is also really, really up there. So
yeah,
pretty exciting.
Yeah, just sold strike, is a great way. It's a great measure. You really shouldn't be hitting your sold strike, but I also want to teach people you don't have to freak out if you hit the sold strike. Because the whole idea is you can get to the sold strike and then kind of bounce off of it and still win. Trade sideways, win. Trade up and win. So the idea is you can win in 3 ways: down, sideways, or up. And down means it's kind of moving towards your sold strike. So it's not an area where I freak out, but it is an area where you need to be more aware, if that makes sense.
Yeah, and I think one of the really powerful things here is you've been trading penny stocks, for example, for a decade plus. And so you also have that directional ability, whereas a lot of people that are trading, say, spreads, they really are just kind of neutral. But you also have the added advantage that you have the ability to predict bullish price direction as well, right? So
I
like
think that helps a lot.
it does, yeah, for sure. Like I think it really does. Here's a comment. I don't know who Snuggle Cloud Blankets is, but they're saying I banked on Netflix and Tesla and Microsoft. Are those trades you were doing? I haven't been
we
following
did all three of those in the last week. Yeah, I mean, we've not missed much, so members have been generally very happy. It's not that every day is good. You know, some days, what I've been trying to teach people is some days just general market direction because of the economic calendar, Fed speakers and stuff. You know, the market goes against everything a little bit, right? If the market's down 0.5%, your trades are going to be down some, moving towards a soul strike. It's not a reason to freak out. But yeah, those are trades that we made, and you know, lately everybody's been happy. But when I see beginners a little bit stressed, it's just they're not used to the fact that the market doesn't go up every single day. So if you're going to be in trades, you know, your trades are going to fluctuate. But the nice thing about, you know, the short put spread, especially if you're going out of the money, 1 to 2 strikes below the price on these great companies, you know, even the stock goes down a little. You know, in my mind, I sleep very well at night. It's only when like there's an extreme move that I myself kind of come under pressure or feel pressure. But I get it, you know, with people who are new. So that's my experience lately, Russell, is people have been very happy. But I don't want anybody to think that it's going to be just peaches and cream all the time. There's going to be days where we're in trades and it feels like, you know, the sky's falling. But that's just the market. I think that sometimes that's just beginners not fully understanding that, you know, not every day is going in your favor.
100%. And I've had several heated debates with people who have joined services at particular times and been like, this is terrible. This guy's a scammer. Not necessarily you.
Yeah.
And then like the time goes on and they're like, oh, whoops. Yeah, actually, like they were just people can't handle that pull, that drawdown sometimes. So anyway, moving on, because we've got a lot to cover here. This is crazy. So Norman is saying, does Jason give out the trades to members before he makes them, after he makes them, I guess he repeated that, or as he makes them? That's a good question.
Before. That's a Raging Bull policy. So it's on the watch list. I think Microsoft was Thursday morning last week. That was my last trade. I want to say it was Thursday morning, maybe Wednesday morning, whatever morning it was. It said very clearly, the only trade I'm looking to make today is Microsoft. Then I made the Microsoft trade. What happens is you get what looks like a text message to your phone before I enter. So you have the watch list that says, hey, I'm gonna make this Microsoft trade. But then you get an alert that says, all right, now I'm gonna do the Microsoft trade. So you're notified. It looks like a text message, you know, Russell. And then I enter, and then, you know, with this type of trading, we're benefiting from time decay. I often tell people it's like a bucket full of water, but the bucket has holes in it. So the person who buys the option is just losing the time, you know, and that time is represented by the water leaking out of the bucket, and it's going into our bucket.
Yeah.
You get those alerts. Before I get in, before I get out. And there's really not a lot of rush because, again, we kind of want to be in these trades because we're benefiting from the theta decay of the option.
Yeah, and also the delta as well, right? So if the trade moves against you a little bit, the next day can sometimes be an even better opportunity to get in. Like I think I mentioned earlier, where like sometimes the delta moves and you're like, okay, cool, I can actually get better than Jason, and then boom, suddenly you've got more profits than you. So it's not a chasing, crazy, scalping, nut jobby type.
Yeah, and there's no averaging in too, which is nice. You don't benefit much by trying to build a position. So you just grab your position and you let it play out and you manage it.
All right, so the alternative contrarian, how's it going? I talk to you quite regularly on my channel. Thank you for being a regular viewer and commenter. Is this options and penny stocks? It's options, completely options. Yep. Jason has another service called Lightning Alerts, which is penny stocks. And if you're interested in that, just send me a message. I can send you a link to join his service. It's fantastic. I love it. It's one of the best penny stock services out there, but we're talking primarily about options and selling option spreads at the moment in particular. And
you know, when we compare that to penny stocks, in my opinion, to try and grow a 2K account. This is just my professional opinion, and I'm not an investment advisor, but I don't think that I could take a 2K account and ever get it to 25K. So the fact that I've already taken a 2K balance and gotten it to 26K illustrates my point on the spread side. So I think a lot of people think that they can't do spreads at all, and that they have to have, hundreds of thousands of dollars or even millions to do it. So what I'm trying to prove to people is, yes, over in Lightning Alerts, I trade penny stocks and I love penny stocks, and that's kind of what I grew up on. But over here, if I'm being 100% honest, there's no way that I think I could ever take 2K and turn it into 100K on penny stocks. But I believe in my heart that I will certainly land at 100K with this, spread strategy. Now, again, there's no guarantee that I will, and even if I do, that you will. But from what I'm hearing from customers, and this is what's so exciting, this is my fastest growing service that I've seen ever. It's not certainly a cheap service, but it's not a super expensive service, but it's growing very fast. And the feedback I'm getting from customers is very favorable, in a sense that what I've been able to do myself, I've been able to teach people to be able to do. So some, right? So I'm not saying that that's typical or that everybody will, but the testimonials that I'm getting on Trustpilot suggest that what I'm teaching is landing with readers, and they're finding their ability to kind of do it themselves. And that's the ultimate goal. I don't want people trying to mirror my trades. It's certainly fine if people want to. I mirror other professional traders' trades. But what I want them to know how to fish for themselves. So if they are leaning on an alert, they know exactly what they're doing. It's their trade. The worst thing that can ever happen is somebody's like, well, I'll skip all the education. If Jason thinks he can do it, I'll just trade when he trades. That's fine. But I don't think that's the right way to go about things for like a subscriber. And again, I subscribe to services outside of Raging Bull, outside of my services, so I know exactly what other people are thinking, and I'm just trying to pass that along.
Yeah, so many questions, man. Like I'm gonna rattle through a couple here because Azik is asking, do you ever trade 0 DTE? This is not a 0 DTE options service, so it's not.
Yeah,
really
that's like the antichrist of what I'm trying to do. I don't know if that's politically correct, but that's so when you buy an option, the whole idea is you have low probability of winning. 0 DTE is like the worst probability of winning. So what I'm trying to do is the opposite of that. I'm trying to have the highest probability of winning. So when I say that 0 DTE is, anti of what I'm doing, it should illustrate that point. So, but there's nothing wrong with it. We have services like that in Raging Bull. It's a lot of fun, and I do trade those at times because outside of Small Account Journey, I like those home run swings too.
Yeah, definitely.
They just don't work often.
Right, exactly. So yeah, so not 0 DTE. I don't know if you guys can see what's on the screen at the moment. I just want to have something up while we're answering all these questions so people can see what's kind of going on. So Journey A, is that up on the screen at the moment? I can never tell.
I see it.
Yeah, so Journey A at the moment is fantastic. Let me just put it full screen because we don't need to see Jason and I talking here. Journey A has gone from 2,000 to 25,000, which is fantastic. Journey B, which is running simultaneously, is up 205%, so from 2,000 to $6,000, which is fantastic. So just wanted to remind people of that before we go back to all these questions that we're getting, which is awesome. Let me keep going with the questions. Bejam is asking, does Jason give you what to take daily and what to set stop loss at if you were doing the 2,000 strategy? So
every trade is the same. So anybody who subscribes would start by watching a handful of lessons. I think there's 5. Lesson 1, 2, 3, 4, and 5. It's a series of workshops and stuff. But at the end of the day, there's a daily watch list. There's a strategy. There's guidelines. There's benchmarks. There's a daily watch list. The alerts go out before I get in, get out. So as far as like somebody wanting to learn, that's the whole point of Raging Bull. You know, we trade real money so that we can show people what it's like, good and bad, to trade real money. And in this example here, that 2K to 26,000 or 25,471, you know, there's 58 wins and 2 losses, so 60 straight trades. You know, not every one of those trades was like, you know, no sweat, right? So every day I'm teaching about those 58 winners, like what's happening, what I'm expecting to happen. You know, it's either going really easy or my back is against the wall. So maybe I'm not getting to my 50% goal. I'm taking 20% winner instead of 50%. So I guess my point is, like, everything is communicated in real time because I'm a real money trader. So this is what I do for my living. I teach people to trade, and I do it by trading real money. And I alert people before I get in and out. So there's no way to miss any details on this. I think there's always room to improve, and I'm sure I'll figure out a way to improve it from here. But I feel like I have this particular service is close to perfect as I've ever had a service.
100% agree, for sure. Yeah, fantastic. All right, let's keep going because we're just getting inundated with stuff here. Let me see. Tyrone is asking, do we just get the trades or do we also get training? That's a good point. You're a teacher at heart. I know that for sure. So
yeah,
like,
yeah, I won't go down the rabbit hole, but you know, master's in education. I was hired out of college in a prestigious New York State public school to teach prior to graduating college, which I was the only person in my class to do that. It's not like, you know, obviously. Well, anyways, I was still pretty proud, is my point. So graduated, taught in a public school for 10 years, got my master's degree, started my second master's to be a school principal, decided to leave so that I could teach people to trade. I literally left after 10 years to teach trading instead. I've been doing that for 11 years. So I've technically been teaching for 21 years, 10 years in a public school, 11 years teaching trading. So the whole point is not just to provide trade alerts, it's to teach people why I am making that particular trade. In fact, the trade alert is just kind of like the cherry on top. It is the way of showing people that everything I told you in the lessons is now being used in a game. You know, it's how it's like game time. All right. So, you know, you've seen the practice plan. We've gone through the drills. Now let's put that drill into the real world and see how it works.
Yeah, and with your lightning alerts, you know, I sat in there most mornings for a long time, and you really are the educational guru out there. Like, you really explain more than most people ever do. A lot of people it's like a black box, right? Where they're just like, oh, go take this trade. So I'm impressed with that. Alex is asking, how many trades are done per day or week or month for the small account journey system?
Well, if we look at Journey A, it's been 60 trades across 90 days. So you could divide that up. Journey B has been 9 trades across 40 days. So there's less trades when the account is small, because from 2 to 5K, I do max allocation. So there's 1 trade at a time. That trade could be on for a full week. I do 5 to 7 days to expiration. So if you think about it, $2,000 balance, let's say it started today and I entered a trade. If that trade's on for a week, I've only done 1 trade in a week, right? But now, all right, so now the one account has grown to $25,500, and I can do up to 7 trades at a time. You can see how there would be a lot more trades at a given time. So as you progress through the benchmarks, you would see the amount of trades increase, if that makes sense.
Totally, yeah, makes sense a lot. So for the guys asking about the price, at the moment they're running a sale for $599 a year, which is an absolute bargain. If you look at any of the systems, so if I go into the, let's see where we are. I always get so mixed up. There's so much stuff in your guys' market journey. This is the status here. So what I've been telling people, and you've got to take this with your own, it's your own risk assessment type of thing. But if you start with $2,000 and you paid Jason $599 for a year, and you did 3 trades, and suddenly you were at $3,500, and another 3 trades you're at $5,000, another 3 trades you're at $6,000. Would $599 for a whole year seem worth it? To me, absolutely 100% it would. Like,
Yeah.
it's like a no-brainer. And then when you include into that like all the education you get, Jason's commentary and all this stuff, and just learning how to do these trades yourself, like it's pretty amazing. So it's definitely pretty amazing. This is the page for checking out, guys. It's a limited time offer. Not sure how long it's going to last for, but it's pretty limited. As long as you use the coupon code SAJ, so small account journey 70, and I'll put a link in the comments in a minute as well. And you can see that the seats are disappearing pretty quickly. This is a really popular service. People are excited about this, so it's just something to consider. At the current, like, the going rate for this is like $19.99, so almost $2,000 a year. I've seen services that are far inferior sell for a lot more than that. So this is something that's definitely worth checking out.
I like doing the sales on this, Russell, because I think for a lot of people, if they're interested in the 2K journey, they're really motivated to try and learn. That's my instinct. So I think, the retail price of $2,000 or $1,999 is totally fair. Like I said, in 90 days, I've turned 2 into 25. That's not to say that anybody will, but I think it demonstrates the potential. And so to me, 2 to 25 in 90 days, asking for 2 for a full year isn't too much. But I also remember when I was a school teacher, my trading account was $2,000. You know what I mean? So if somebody was asking me for $2,000 for a subscription, I'd probably pass. Now there weren't a lot of great services like that 20 years ago when I started trading, or 18 years ago, or whatever it was, when I was still a school teacher and I was trading penny stocks. You didn't have people out there really teaching systems. This is a completely transparent, and for $500 or $600 for a full year, I'd be shocked if anybody purchased that and was disappointed. I'd be really shocked based on where I know this program is at and where my readers are telling me they're at. Anybody who's serious about it, like really wants to get started, even if you're like me back when I, was at a few thousand, it's a manageable price. And I like that because I feel like if customers, if they see some sort of success, then that 500 becomes like, it's non-existent to them, right? Because I think so many traders never make any money at all. So this program, if I compared it to like lightning alerts, if somebody was to say, "Hey Jay, where would you steer me?" 110% of the time it would be this. Lightning alerts it's up and down. I'm definitely good at that, but this is just a better program in general, especially for a small account. So I can't say that enough. I believe in all of my strategies, but when I had to choose, and I never wanted to teach people how to try and grow a small account, because honestly, I really never knew. And I've traded small accounts before. It's not easy, but I've finally put a good program together, and I'm really proud of it.
Yeah, it's fantastic, man. And this comes to the question that Jim's asking: is this for newer traders or more seasoned traders? I want to add a little bit in here. I wish I'd started this style of trading years and years and years ago. I started just buying and selling options, calls, and penny stocks, and I wish I'd started spread trading like this, and especially with somebody like Jason guiding this type of trading. So for me, it's for new traders as well, because it's not that hard to sell a spread. It really isn't. It just sounds hard. It's something you have to mentally get over, as opposed to just the simplistic, like, I'm going to buy a stock and it's going to go up, or even just short, where I'm going to short it and it's going to go down.
Yeah.
This idea is it sounds bad, but all it is buying and selling at the same time. That's all it is.
Yeah.
And
It's not, or as you pointed out, it's not overly complicated. Anybody new, this is the place to start for sure. I'm 100% positive on that. You'll just be better at all forms of trading if you can actually learn and master this, which I think I can teach you to do. Can't guarantee that though. But I will also say that if you are a fat cat, it's entirely scalable for millions of dollars. So
Yep.
this is what institutions are doing. So unfortunately, this is not what's taught to traders. People want to buy penny stocks, which I get. I did too, and I still do. But when we're talking about, if we're gonna be honest with ourselves, what's the number one goal of a trader is simply to be profitable. That is the only goal. It doesn't matter how you have to get there. It's to be profitable. Yet so few are, right? We know most people lose money trading. I feel like if you were to say, Jason, what is the best edge out there, which is a strategy to attempt to be profitable? It's a small account journey. And Russell, I'll say this 1,000 times over. I don't care if you have $1 million. And if you don't know how to trade, it's going to zero. It's just a matter of time. So I've seen people do it over and over and over. I've made and lost hundreds of thousands of dollars on single trades. So it doesn't matter how much money you have. If you're not good at trading, it will not grow. What's nice about the 2K small account journey is if you can figure out how to grow that 2K to 100K, I'm certain that you'll be able to manage that 100K better than most people who have 100K, which means, you're on a pretty darn good path as a trader. So I will make, outside of small account journey, I'll do spread trades with $50,000, with $100,000. I love doing it, so I'll put 60 in to try and make 40, right? I'll put 30 in to try and make 20. But in journey, the goal is to teach people what is a true program. Like, if we were to just open up the box, is there a full program in there on how to truly try to get from 2K to 100K? Again, no guarantees I will, no guarantees if I do, you will. But this is an out of the box program where it is designed to try and get that account to 100K. Make no mistake about it. If I don't pull that off, then I will have failed. It doesn't matter how big I have to get that account. If it doesn't land at 100, but now that I'm at 26 almost, and I'm at 15% allocation. I mean, how many times would I have to screw up in a row to go back to zero? It'd be it's almost impossible. I won 58 out of 60, and I'm at 15% allocation. I've already gone through the more strenuous patch, if you ask me.
Yeah, definitely. And so, combining a couple of questions from the alternative contrarian, he's saying, how long will this go on? Is there an end? Should we see a start of a new journey soon? Will there be a journey C? That's a great question. There is a journey C. It's coming on Monday, right?
Yeah, the 24th. Yeah, that's kind of the whole point of the sale. I'm offering 100 people an opportunity to begin at 70% off, and then we'll start a new C journey. But those customers will still see B and A. So it's not like you just get C. If you subscribe, you get everything. So as long as A is running, you get it. As long as B is running, you get it. I hope they're always running. So, but you also get C. Some people really want to see like 2K start fresh, and I get that.
Yeah, loads of questions. Let's keep going. We have 10 minutes left, so hard deadline on this. We're going to get through these questions.
Yeah, Norman, man, I'm fine. I love this.
Yeah, it's great. I mean, this is great. I love how many people are really getting interested in this. So Norman is saying, do all the journeys have the same trades when they're running concurrently, or are they different trades? That's a good question. Never thought about it. Are they the same?
Yeah.
Or are they different?
Well, they would be different if you think about it, because let's think about this for a second. Journey A is at benchmark 4, whereas Journey B is at benchmark 2. So benchmark 2 means I can make 2 trades at a time, 50% allocation. Benchmark 4 means I can make up to 7 trades at 15% allocation. So you will have the same tickers though. So and let me be perfectly clear. Even though benchmark 4 says that I can do up to 7 trades, I really only like doing 4 trades at a time in any journey. So journey A might have 4 trades on, whereas journey B would have 2 trades on right now, because that's the max I can have. But as journey B progresses, I don't think any journey A, B, or C, me personally, would have more than 4 trades on at a time. So if I had 3 journeys running and they were all, in benchmark 4, then I might have 4 going in A, 4 going in B, 4 going in C. Right now it's up to 7 in A, up to 2 in B. I only have 7 stocks on watch for 3 months in a row. That's a nice part about this strategy. And there's a reason for that. All we do is keep trading the biggest earnings winners from the previous quarter. So we're kind of in earnings season right now. We're building a watch list. But last quarter, quarter 2, it was JP Morgan, it was Nvidia, it was Meta, it was Tesla, it was Microsoft, Netflix. So a lot of tech, but a little bit of diversification with, retailer Lululemon and then a bank, JP Morgan. But most of my trades happen in tech because the implied volatility is high there. My point is this: there's only 7 stocks, guys and gals. So whatever's happening in A is also happening in B. And when I start C, there will only be one trade open in C for a while, right? But A will probably have that same trade on. B will have it on as well. So I know that sounds crazy, but the point that I'm trying to teach you right now, every trade I make is exactly the same. No journey gets preferential treatment. No trade gets preferential treatment. Every single trade is the same. And so even if I was only running journey A and the account was at $26,000 where it's at right now, and you were to start, every trade would be treated the same. So even if you were starting fresh with 2K and you were going to follow the benchmark progression, and hopefully it works for you, but no guarantees. My treatment of the trades would be the same as you would treat them. So, Russell, it's a question I get all the time. People sometimes think, well, wow, you've grown from 2 to 26. I missed the boat. Not at all.
I hear that too.
Right? I'm only putting 3,500 into any given trade right now because I'm at 15% allocation. That's the nice part of as the account grows and you diversify using the allocation structure. Start at 100, 2 to 5. If you blow up your account at 2, it sucks, but we can all scrape together another $2,000 no matter how hard we have to work, right? Yeah. But you don't want to blow it up when it's at 50 or even where it's at right now where I'm at 26,000.
Right,
so,
right.
At 2K, we do 100% allocation because if we're going to screw up, that's the time to screw up. That's what I learned by doing max allocation all the way through. But at 26K, we don't want to go back to 0 at this point in time. We want to get to 100. So I'm at 50% allocation now. Be very hard for me to mess it up, but it's possible. I don't think it'll happen. More importantly, to answer the question one last time, I'm at 15% allocation on 26 grand. That's about $3,000 to $4,000 a trade. So not far from where I started at 2 per trade. Every trade is treated the same.
Awesome, man. Like, you see the comment that I just put up here is this reflects like what my opinion of you basically is. Jason Bond is a workhorse. He gives trainings on weekends, holidays, during vacation, super transparent and his energy.
I like that guy.
It's true. It's true. I mean, like,
it's not work when you really like it. It's, I want to be an athlete. Trading's competitive. So it's, building a business, as it's competitive. So I like it. So for me, it's not work, but I appreciate the kind words.
Yeah, fantastic. So Edward's asking, what option level do you need to trade the system? Also, are these other trades? I'm not sure what other trades.
No, there would be nothing else in this. It's just a short put vertical because think about it for a second. And I try to tell people, Russell, there was a 3-year study by the CME. It was a decade ago or so, maybe even longer. But across 3 years, 82.6% of put options bought expired worthless. So if you think about that for a second, if tomorrow you decide to buy a put option on anything, according to that study, you have very low probability of making money. So all we do is sell people out of the money put options. So it's a very high probability strategy. I try and tell people, like, if you really do the exercise at the end of Mark Douglas's book, it is identify your edge, which I've taught people. Here is our edge. Our edge is pick the top earnings winners, whatever they are. So we're in an earnings season right now. We'll find out in the next 2 weeks who crushed earnings the most. That's our list of 7 stocks. We just keep selling puts on them across the whole quarter. Every time we get 30 to 50%, we put it in the boat. We do it again. All right. And there's some protocols there with technical analysis that we use. But the point is there's no other trades. There's 7 stocks, and it is all short put verticals, even in a bear market, which is when this started. We just keep selling puts. And even if it was a bear market, which we probably won't see again for another 5 to 10 years, the top 7 earnings winners and the way we know that is like the options market will tell you, like Nvidia is supposed to go up or down 7%. right?
Yeah.
At earnings. NVIDIA went up 24.4% at earnings. So it was supposed to go up or down, plus or minus 7.2%, but it went up 24.4. That's how we know that NVIDIA was an earnings winner. And more importantly, it smashed the expected move. So that becomes a watch list stock. All we do is sell puts on it. We don't need to do anything else. Like the account just needs to get to 100 grand. Like just, I try to tell people, keep that in your head. We don't need to do YOLO call options on NVIDIA, even though we think it's going up. You just keep selling puts. It's the safe trade. Get the account to 100 grand. Learn how to trade. Like to me, that's the important lesson here. So it's a great question, but options clearance on this will depend on broker. It's usually 2 or 3. I don't think it's overly complicated to get. It's funny. Brokers allow you to do the most risky option, which is level 1 options, which is buying options.
That's true.
I think they may do that on purpose.
That's a good point. I never thought of that. They make you jump.
I don't want to get down the rabbit hole here, but the hardest trade to make is buying an option. We know that they have very low probability of working, especially an out of the money caller put. Yet that's where most kind of traders gravitate to. Yeah.
Well, so many questions. So I want to respect your time, Jason. I know you've been working, just nonstop. So I want to make sure that you're okay answering any more questions. If you're not, it's 100% fine with me. I'm sure the audience understands. If you want,
I love it. Keep going. Yeah, it's fine. If you have a few more, I saw somebody ask what broker. I like TD Ameritrade. Love it. If I was starting fresh, I would definitely do Tasty Trade. So
Tasty's great. I love Tasty. Yeah, like I've become a huge fan of those guys. Yeah.
Yeah, they built that system for spread trading. So, but TD Ameritrade is right there with it. So, and that's just where I've been. I love those guys. So, but any broker's fine. So, any broker will work.
John Albert or Allert is asking, is there an upsell? No, just buy the annual.
This is it, man. This is my bread and butter.
This is honestly, I feel like you're I don't know if you've heard the phrase cutting me own throat. It's like an English phrase. Like I feel like $5.99 for this is just ridiculous. I mean,
it's also, I agree with you, and we toyed with this, right? Because it's been very successful. I think I would rather have more subscribers that are super happy than people pay less subscribers who paid more money. It kind of puts their back at a wall, right? If you pay $500 for something and it works, and it really works, we're best friends forever, right? So I have not you and me, Russ, obviously we're friends, but I'm talking about the customer, right? If somebody, because everybody's skeptical, right? Like there's a billion programs out there that teach trading. I sell other ones myself, and I'm telling you flat out, they're good, but they're not as good as this. And good is relative. It depends on what you want. But this is scalable for fat cats, and it's great for a 2K account. So I think it's great for everybody, right? At the beginning, you said, well, what if you were doing this with a 20K account, right? Anybody can just do the math on that. I'm not going to because I don't want to project that because it's a different situation. But the point is, you could. This is tradable to the millions because this is what institutions do. Unfortunately, the beginners just don't know that they can do it. They gravitate toward, and I was in the same boat. You gravitate towards trading penny stocks because it's a quick buck. But often it's not. You gravitate towards buying out of the money options because it's quick buck, or YOLO options, or 0DT options because you're trying to get that account up fast. But maybe you win a few in a row and then you land at zero, right? So what I'm trying to teach people here for $500 or $600, and that's the sale price, of course. We charge more at retail, and I think that's fine. But when we run these sales, I really want to get in anybody interested because I think if at that price you see progress in your skill as a trader, then that's what I mean by we become friends, right? Like I did my job. I taught you something that truly works, that you understand and can execute yourself. And I tell people this all the time. My goal within a year is for people to know how to do this and not need me.
That's perfect.
Right? And then my thought is they will just continue to pay because it worked, right? So they'll be happy to see the trade alerts and stuff. But at the end of the year, it's not like you would not know everything that I know. The only difference would be I have 11 years of experience. So if you don't have that, then maybe I've seen things that you haven't seen in the marketplace, right?
Yeah.
That's that. But I can't give you 11 years worth of experience, but I can teach you in a short period of time what I've learned in 11 years. So
Yeah.
that's where I think people really benefit by being subscribers. When I make trades, to your point earlier, I'm a momentum penny stock trader. This is a very hard thing to do. It sounds easy, but it's not necessarily easy.
No.
If you could predict momentum in penny stocks, predicting it on Nvidia after they just told you, hey, the market, which is pretty smart, run by algorithms, says, and artificial intelligence says that the move is supposed to be 7% plus or minus, and it's plus 24.4. Nvidia is not going down for the next 3 months.
Right.
So somebody's buying out of the money put options for whatever reason, and we just sell. I call them sucker bets. Somebody's buying, somebody's making sucker bets, and we just keep selling those people sucker bets. That's how I won 58 out of 60 and 9 out of 9. I don't know what else to tell you guys and gals. It's a pretty smart strategy. I'm proud of myself.
Yeah, it's amazing. And this guy, the Alternative Contrarian, a follower on YouTube that definitely contributes a lot, and I'm thankful for his contributions. He's saying we all owe Jason a huge thank you. I'm excited to join this. So
Thanks.
people are excited about this. Tyrone's asking July 24th. I think that's right. The 24th is when the C version comes out. Is that right? Monday?
Journey C. And the reason for that is, all right, so I have a 7 stock watch list. 2 of them are reporting earnings on Wednesday, right? Tesla and Netflix. So JP Morgan already reported. So of my 7 stocks that are on watch, 2 I can't trade this week. 1 already reported JP Morgan, and they did not smash earnings this time around. So JP Morgan is off the watch list, so I'm down to 6. And then Tesla and Netflix report at 4:15 or 5 o'clock on Wednesday after the close. So I'm down to 4 actually trades that I can make, which is Nvidia. Well, we don't have to go into it. My point is we're kind of rebuilding the watch list right now. So it's the perfect time to start a new journey. And it's the perfect time for people to join. It's the whole reason for the promotion is I'm in the process of doing what I did 3 months ago when we went on this, 3-month win streak, which is putting together the list of 7 stocks. I'm sure Tesla's going to smash. Nvidia probably smashes again, so they'll still be on the watch list. But until we see the numbers, we won't know who are the best companies for the next 3 months. Because we're looking for whoever does the best, whoever did the best across the last quarter, but also tells us they're going to, smash guidance for the next quarter. So we want that combo of smashed what was the expected move, but also told us they're going to do really well.
Yeah.
And so we're putting that together like literally right now. It's a great way for people to learn how to build the watch list. I don't want to be, I don't want to sound like it's some sort of secret sauce. It's pretty straightforward. The media, Wall Street Journal is not going to miss whoever the top earnings winners are. So but we're doing that now. And as that comes together, which it is, next Monday, we'll be in a good position to start, kind of going on the quarter 3 progression. We use the same 7 stocks for 3 months is my point. So, we're picking them right now. So
definitely.
So it's good timing in that regard. 24th, we'll probably have half the watch list, which is plenty, honestly, for the first couple of months, I traded 2 names. It was like Tesla.
Right. I noticed that. Meta, NVIDIA, and Tesla were like
You don't have to overcomplicate it here because all you're trying to do is find the stock that is least likely to go down, and then when it's at the 10-day EMA, sell puts below the 10-day EMA, and as the stock trades sideways or higher, you take it off, and then you just keep doing it. So I know it may sound like too good to be true. There's a lot more to it than that, but that's kind of the nuts and bolts.
Definitely, man. So much stuff coming in. Let's rattle through them. Does the PDT?
That's a good one. The PDT rule.
That doesn't affect the trades because they're swing trades, 2 or 3 days usually, right? It's kind of what you're looking at.
Yeah. So we just had this conversation in the workshop I did over the weekend. I did a workshop Saturday and Sunday. Of the 60 trades, 22 were closed same day. So 22 out of 60. But the important part is that's 3 months. So that's 12 weeks. 12 weeks times 3 trades per week, you would have had 36 possible day trades during that period of time. So, and even if we say it was, even if we say it was more like, 10 weeks, it would still have been 30 day trades during that period of time, because you're allowed 3 and a 5 day rolling. Keep in mind, the account is now over $25,000. As the account gets bigger, we're allowed more trades.
Right.
That means the number of trades closed same day will increase. In the 2 to 5K period, there's only one trade on at a time. So all right. So journey A, 22 out of 60 across 3 months. So we know that you would have had over 30 day trades available to you. So it was below the threshold. Journey B has gone on for 40 days, 9 trades, 3 of 9 were closed same day. We do want to take a 30% or 50% winner if we get it same day. So we don't want to neglect paying ourselves. Like if we got a 2K account and all of a sudden it's at 3K, like we want to lock that up, right? So we want to reserve those day trades for this challenge. I would say that if anybody's brand new and, or I'm sorry, if anybody is like using their day trades for penny stocks, start a fresh 2K account, like a Tasty Trade or something, where you can with a new broker, so you can reserve your day trades for the 3 in every 5 for this strategy. It's super important. I personally think it's a good problem to have. Like if we're up 30% and you can't take it, that's way better than being down 30% and having to wiggle out of a loser. But you still want to be able to like lock up wins fast. So Russell, final point, 9 trades in Journey B across 40 days. That's 40 days. I guess you would have had 5 weeks. That would have been 15 day trades available. I only made 3. So on Journey B, you would have had 15 day trades available to you. 3 were locked up same day. So it illustrates I'm way below the threshold. I do trade everything out of my larger account. That's important to bring up, which I've always said, because I'm running multiple journeys, right? So, but I'm cognizant of the pattern day trade rule is my point. So I'm aware of the numbers, and we've not crossed the threshold yet.
Yeah. All right, cool. It looks like we're nearly wrapping up here. Just a nice another comment from Mr. Snuggle Cloud Blankets. Last night, due to Jason,
I like that.
I made 30% on cost and dash bull put spread. Thanks, Jason.
Yeah. That's my jam. I'm gonna get in some Snuggle Cloud Blankets next.
I love the names. Like Benjamin's asking, can you make more money using this or penny stocks? We already covered that. Basically, this is more profitable than penny stocks. That was
I don't want to stamp that, because it's how much you allocate, right? If I have a $500,000 account and I'm trading big penny stock positions, these numbers are smaller because I'm trading the 2K account. I think the big thing here is this is totally scalable. I could be doing this with $500,000. I've chosen to do it with 2 because that's the minimum amount needed at a broker. But if you can learn how to grow 2 into 100, you're just going to be a better trader. Anybody who can truly learn how to grow 2 into 100, all forms of trading that you do, you're going to be better at moving forward. And to be honest, you might not want to do anything else, right? If you really, at the end of the day, right, we're just trying to make money. So do we have to also be good at this, this, and this? I mean, you can choose, guys and gals. I don't want to make that choice for you. But I sometimes question Russell myself, like, maybe I should just do this. And only this.
Anyway, final question is from Erin Perry. So she's asking, what is the average ROI and what's the average hold time, please? Thank you.
Everybody's got access to the spreadsheet. If they don't, we'll have Russell provide that, or I will. You could just there's the trades are right there on the spreadsheet, right on actually on the homepage there. Thank you. On the sales page. See where it says see the trades? If you just open that spreadsheet there, if you click on that blue button, Russell.
Oh, see the trades.
People could do the ROI there.
So if you go to the link that I've put in the chat box there, you'll get to this page, and then you can start to see this as well. So that's a really good tip, Jason. If you click on the link in the chat box, I've posted several times now, which is the sales page, you can get into this, and then I guess you can zoom in more like this, and you can see the different trades and everything. So
every trade should be about 5 to 7 days to expiration. So the average hold time would be less than that. So as Russell pointed out, we're trying to make these swing trades, but you could just do the whole times yourself, guys and gals. I haven't calculated it, but it would be less than 7 days for sure, because I'm always selling 5 to 7 days away from expiration. And then you could also just aggregate the percent return column and figure out what the ROI is. But the overall ROI so far is almost 1,200% on Journey A, 1,200%, which is pretty awesome in 3 months. So 2K to 26,000, and then B, I think, is just over 200%. So 2K to 6,000. So that would be the so far. No guarantees that'll keep going up, guys and gals. I don't want anybody. I'm not a magician, but this is a pretty damn good strategy. So
definitely, yeah. And to kind of close on this, like, people keep asking, and knows this. You can start these journeys anytime, but there is a new one starting on Monday, which is why Jason's here now talking to me, and we're doing this sale together, so that you can get in on the ground floor with the $2,000. To be honest, you can do that at any time. You can scale and learn and from Jason's journeys that are already in the middle of, like we've said. But you can also, if you really want to start when Jason's starting a new one, Journey C is starting on Monday, which is why it's important to buy the service and start it like this week, so that you're ready to go on Monday when he starts with the fresh 2,000. If that's how you feel about the way that you want to follow these.
When we started B, we had a flurry of new subscribers, and I don't know anybody who's unhappy. So it's gone well, as you can see, both with A and B. So when you join, it's not like you only get C. B will continue, A will continue. So you'll see a lot more trades than when I first started this whole program. If you think about it, when I first started A, there was one trade on at a time, and that went on for, probably a month, until I got the account to 5,000. Then there was 2 trades at a time. So a nice part about joining now is you get to see a fresh 2K balance go to work, go to a bat. I think it'll go good. But you also get to see how B progresses, and you get to see how A progresses. But make no mistake, every trade's the same. Russell, some people join and are like, whoa, from 2K to 5K, you do 100% allocation. I don't like that, Jason. Seems too stressful. A lot of people start at 50% allocation, so they'll only put $1,000 on per trade. And the reality of doing that is, it's just going to be slightly slower growth. But I don't think it's that slow of growth. Hey, that's Suits.
I don't know what's happening with Netflix. So yeah, there we go. Netflix desperately trying to get some free ads there. What the heck was that?
They have 7 seasons. I gave up. I was like, all right, after 3 seasons of that, I was like, I can't do anymore. But that was funny that came up. Yeah, so that's my thought there, with regard to, if you're adamant about seeing a fresh 2K, well, every once in a while we do that. I can't say when I'll do it again, but I'm confident I will. But we are definitely starting on the 24th. So if you want to see a fresh, but what's cool is you also see B and A at the same time.
Perfect. All right, sounds perfect. Thank you very much for taking the time to talk to us, Jason. I think.
Thank you too, and all the viewers.
Yeah, definitely. And I think we're going to have a few more people signing up, and a few more people got questions for me after this live. But I think it's a good time to wrap up. Questions have dried up, and we've run over by 20 minutes. But that's what you're about, Jason. Man. Like you work nonstop. So
thanks a ton, Russell. Appreciate it, man.
Sounds good. All right, Jason. Have a good night. Thank you very much, and guys. Thank you for listening. And just reach out if you have any questions about Jason's services. All right, thanks.